Hi, I'm Mitzi Sullivan with Facts, Figures, and Fallacies from the Front Line. And today I'm on the third in my series of my top 3 tax saving strategies for W-2 wage earners. And so today we're going to be talking about the Mega Roth. And I'm introducing these topics in order because before you do a Mega Roth and before you do a backdoor Roth, you want to start with the HSA. And if you need more information on the rest of the podcasts in this series, you can find links to those below. So once you get your HSA set up and you're maximizing your IRA contribution, whether it's traditional or Roth, every single year, the next thing you want to look at is your Mega Roth. This is where you take your 401k. So you've already set up your IRA, so you've already contributed your maximum amount to your IRA. And now maybe you have a 401k at work, or maybe you have a solo 401k if you're self-employed, or you have a small business, or a safe harbor 401k if you have employees. You want to maximize, if you have a 401k at work, you want to maximize your matching contribution from your employer. So if your employer is going to contribute $3,000 to your 401k, you want to make sure you take advantage of the full match, and you want to contribute $3,000 to your 401k. But outside of that, what a lot of people don't realize is you can do after-tax contributions to your 401k. So you can maximize your employee contributions pre-tax, or you can even make those Roth contributions. With the Secure Act 2.0, this just came out last week, you can actually request that your employer contributions go into your Roth as well. I would prefer to have all of those contributions into a Roth, but it just depends on your income level and your tax brackets. So that's something you want to discuss with your tax professional, whether you want your employer contributions to go in as Roth contributions, or you want them to go in as traditional contributions. The original deadline for high-income earners to make those traditional contributions, traditional employer contributions, was originally the Secure Act 2.0 said that your employer contributions had to go into to Roth accounts if you were a high-income earner. That has been delayed to 2026. But that doesn't mean you should delay, because a lot of times you want those employer contributions to go into the Roth instead of into your traditional. So that's just something to keep in mind. Discuss that with your tax professional, whether it's better for you to make your contributions and your employer contributions traditional or Roth contributions. So let's say that you have taken advantage of your IRA contributions. So you've maximized your IRA contributions, and those may be traditional, or maybe you've done a backdoor Roth, and you've maximized your employee contributions, and you've taken advantage of your employer match, and you still have room. So if you're under the age of 50, you can put up to $72,500 in your retirement accounts. That's the total amount. And you can do the same thing for your spouse, as long as you have enough earned income. If you're over the age of 50, that number increases to $81,000 for you, $81,000 for your spouse. So this is a great way to really build and maximize the use of those retirement accounts and get your balances as high as possible, as quickly as possible. So the way this would work is, once you've maximized your employee contributions and you've taken advantage of all your employer match, and you haven't hit your limit yet, so for under age 50, that limit is $72,500. If you haven't hit that limit yet, you can make after-tax employee contributions up to that limit. And then on day 2, convert those after-tax funds to a Roth contribution. And there's no tax impact of that because you've already paid the tax going in. So now you have maximized the total amount in your retirement savings accounts, and it's sitting there in a Roth. It's growing tax-free, and it'll come out tax-free. And so remember, in your 401k accounts, you may have a traditional and a Roth in the same 401k account, or you may want to convert all of your traditional over to a Roth. So we have some handouts in the description below. You can download the PDF, and it'll kind of has a visual display of what I'm talking about, or obviously make an appointment with your accountant and just ask them, how do I execute a Mega Roth? and they can walk you through step by step. If your employer doesn't allow you to make after-tax 401k contributions, most employers do, and they don't realize it. So you really have to push back with your HR department and make sure they understand what you're asking for. If they absolutely won't allow it, and you have any kind of a side hustle, you can set up a solo 401k. So maybe you have a 401k with your day job where you're earning your W-2 income. You can also set up a solo 401k for your second side hustle job. And whatever you don't maximize, so if you're 50 or over and you can put up to $81,000 per year into your retirement savings accounts, and you can't get that in there through your traditional 401k with your employer, you can make up the rest of that in a solo 401k, set up your own solo 401k, and between the two 401ks, you can maximize this. So $81,000 for you, $81,000, that's $162,000 per year that you could get into those retirement savings accounts. And that's a way to build that balance up quickly so that when you retire, you've got all of that tax-free income that you have access to. So there are some strategies if you have your own solo 401k about how much salary you want to take in order to maximize the 401k benefit, but also not pay too much in self-employment tax or too much in FICA tax. The best strategy for that is going to depend on your income level. It's going to depend on your tax rates. So that's something you want to discuss. Don't just think because you can put $81,000 a year into a 401k and $81,000 a year for your spouse that is the ideal amount for you to put in. You want to look at how much, if you're a W-2 employer and you don't have any control over how much you take in W-2 wages, then it's not such a big deal. But if you're self-employed or you have a small business and you can control how much you take in W-2 wages, sometimes you want to just maximize your employee contributions and you want to set your salary so that you can maximize your employee contributions and take advantage of the company match, but not necessarily pay yourself a large enough salary to maximize the full amount of the 401k. So that's something you want to discuss. Everybody's situation is different. So make sure you discuss that with your tax professional so that you can hit the ideal salary level to minimize your taxes. Thank you so much for watching today. And don't forget to hit the like button, subscribe to all of our social media channels, and we'll see you next time.